Hello friends, welcome to our channel, The Outlier 73, and today's topic on GST would cover creation of various GST accounting ledgers and basic accounting entries which are to be passed while recording GST transactions in any business. Well, it is suggested that the ledger as displayed in the slide should be created, of course, in accordance with the requirement of the business. To start with, in case of input tax credit forward charge, the three ledger which are suggested to be created are input IGST account, input CGST account, and input SGST account. The next one is in case of input tax credit RCM. Well, it is worth noting here that ITC on RCM payment can be availed only after the payment of RCM liability at the time of filing GST 3B. The three ledger which should be created here is input IGST RCM account, input CGST RCM account, input SGST RCM account. The third situation is in case of output tax liability forward charge. The three ledger which should be created here is output IGST account, output CGST account, and output SGST account. Moving on to the fourth one, for output tax liability reverse charge, the three ledger which should be created are output IGST RCM account, output CGST RCM account, output SGST RCM account. The fifth situation is on output tax liability in case of export on payment of tax. The ledger suggested to be created here is output IGST export account. Sixth situation, in case of input tax credit import or cess, the ledger suggested to be created is input IGST import or cess account. The last situation is in case of payment of IGST on import or cess, the ledger suggested to be created is IGST import or cess payable account. Accounting treatment under GST are basically based on the nature of supply, can be broadly classified into two types, that is outward supplies and inward supplies. Inward and outward supplies include both domestic supplies as well as import or export and cess supplies. In case of some specific inward supplies, recipient is required to pay tax under reverse charge mechanism, that is RCM. Accounting treatment of outward supplies depends upon the type of outward supply. The two type of outward supplies are outward supply under forward charge and outward supply by the way of export, cess or deemed export. Likewise, accounting treatment of inward supplies also depend on types of inward supplies. Inward supplies, the three categories are inward supply from registered person, inward supply by the under RCM, inward supply by the way of import or from cess. Let's consider one hypothetical example for understanding purpose. Let's say purchase or inward supply is of rupees 100. Expense is rupees 100 and the CGST and SGST rate are 9% each and IGST rate is 18%. Let's consider the scenario of inward supply from registered person, that is in case of B2B supplies. The journal entry would be purchase account or the particular expense account data to input purchase account or the particular expense account data input CGST account data, input SGST account data to vendor in case if it is a credit transaction, or bank account if it is done for payment. This would be the entry passed for intrastate supplies. Now, in case if it is interstate supply, CGST and SGST would be replaced with input IGST account. Moving on to inward supply under RCM, let me repeat. In case of some specified inward supplies, recipient is required to pay tax under RCM. ITC on RCM payment can be availed only after the payment of RCM liability. So the accounting entry for intrastate supplies will be purchase account data or that particular expense account data, input CGST RCM account data, input SGST RCM account data to vendor account in case of credit transaction, or bank account in case of payment, to output CGST RCM account to output SGST RCM account. In case of interstate transaction, CGST and SGST will be replaced with IGST. Now let's consider inward supply by the way of import or from cess. In that scenario, the entry would be purchase, import, or cess as the case may be, account data 90 for considering the example. Custom account data, input IGST, import or cess account data to vendor account to custom duty payable account to IGST import payable account. Here, IGST is here in the example. IGST is calculated on purchase amount plus custom duty. And on payment of duty, the entry would be custom duty payable account, IGST import payable account data to bank account. In case of expense, the entry would be particular expense import or cess account data, input IGST import or cess RCM data to vendor account to output IGST import or cess RCM account. Now let's consider accounting treatment of outward supply. Let's consider one hypothetical example. Let's say outward supply, that is be of rupees 100. CGST and IGST rate is 9% each, and IGST rate is 18%. In case of outward supply under forward charge, the entry would be debtors or bank account data to sales or receivable account as the case may be, to output CGST account to output SGST account. This entry would be passed in case of intrastate supply. Moving on to interstate supply, CGST and SGST would be replaced with IGST. In case of outward supply by the way of export, cess, or deemed export, there are two scenarios. One is with payment of tax, and the second one is without payment of tax. In the first scenario involving payment of tax, the entry would be debtors account or bank account data, IGST refundable account data to sales or service export account to output IGST export account. In the second situation, that is without payment of tax, there will not be any tax entry. The simple accounting entry would be debtors account or bank account data to sales or services export account. Thank you, friends, for watching this video till the end. I kindly request you to subscribe to this channel, that is The Outliers 73, in more and more numbers. Thank you.